Good afternoon, everyone, and thank you so much for joining us for this NCAP webinar. Hopefully everybody can see my screen. We are glad to have this opportunity to share more information about First Nonprofit, an NCAP endorsed vendor. Navigating unemployment costs, HR challenges, and compliance requirements can feel overwhelming, but it doesn't have to be. This insightful webinar, you will discover practical strategies that will help your CAA stay financially resilient, compliant, and efficient. Today, the First Nonprofit team will discuss everything that you need to not only do those options, but also stay ahead. There will also be a chance for questions for the First Nonprofit team after the presentation. Also, you can feel free to submit those questions during, and we will try and get everything answered. I will now turn it over to Cheryl Jones.
Thanks, Rebecca, and thanks everybody for joining us today. We know that we're in uncertain times. We've been living in uncertain times all year so far with executive orders and now with the looming government shutdown. So I appreciate you all taking the time today to join us. And we're going to turn this webinar from a webinar into a briefinar today. So we're going to shorten it and make it a little bit shorter today so that you all can get back to what you do every day and doing what you do. I'm Cheryl Jones. I'm Vice President with First Nonprofit, and joining me today and presenting is Cruz Mendez, our Director in Marketing. So we're going to get right to the point and share our screen and get going. Feel free to enter questions into the chat as we go along, and then there'll be some time at the end to open it up for more questions and close. We will send the presentation into you and a recording of this so that you'll have it after this. So with that, we'll get going and just give you an indication of who we are and what we do. We'll talk about unemployment costs. They are an unavoidable expense to your bottom line, and they're rising quickly. So we know that that's an impact on your budget and something that you're concerned about. And we'll go through that. We'll talk about remote workforce compliance because, as we know, we've been hiring people remote since COVID. It's just part of what we've been doing. And it's important to realize that you have to pay attention to each state that you're hiring people in. And then there's the opportunity to streamline your HR and unemployment processes and strengthen your service delivery. And we can talk about that because that's something that we do all day long at First Nonprofit. So who are we? We're a national leader in the industry of providing unemployment funding options and saving programs. We're based out of Chicago, Illinois. We've been doing this for over 30 years, working with 2,300 nonprofits across the country. We manage $22 billion in managed payroll. We were able last year in 2024 to return $113 million or save $113 million in unemployment claims savings and return back almost $13 million in experience credits to the unemployment, to the nonprofits participating in our program. And in the program, there's 740,000 employees in the program. On average, we save about 30% for employees, but usually we can save up to 60% depending upon the size of the agencies. And we work with 48 national and state nonprofit association partners, of which CAP is one of the association partners. And we were able to save and bring back to organizations $14 million in the Employee Retention Credit Program in the program. And we have over 30 years working with nonprofits. So CAP is one of our partners. Denise sits on our board, so she is very critical to how we manage the program and giving input into it. But here's just an idea of all of the other nonprofit network that we work with. And I think what's important to that is we have an ear to the ground and we have a lot of people who we know and pay attention to what's going on. And just listening in on the CAP webinars and listening to what all of you are going through, it makes us more insightful and more able to understand what's happening at your organization, whether it's, the weatherization programs or, the Head Start programs. We're listening and paying attention to that and how it's impacting your organization, and in light of how it might impact what's going on in your unemployment area. So it's important for us to pay attention not only at the national level, but at the state level. What's happening in Massachusetts, what's happening in Arkansas, what's happening in Kansas. So having these alliances really helps us pay attention to what's going on at each individual CAP organization statewide. So what are our guiding principles? At First Nonprofit, our priority is to help you save money on your unemployment, to protect nonprofits from unexpected expenses, to be compliant, because it's very important at this stage of the game to not only be compliant with what's going on, but to be able to complement the processes and procedures of your HR staff. And we have a relentless focus and obsession with delivering to our clients so that you can deliver on your mission, which you have been around for a long time. You spend what I forget what's 50 years, 60 years, I forget your anniversary that you just had, but it's been a long time. So we're here to deliver on our obsession so that you can deliver on your mission. And with that, I'm going to turn it over to Cruz so that she can talk about unemployment costs, and they're unavoidable, but quickly rising at this point in time.
Thank you so much, Cheryl, and thank you all again for joining us today. I just wanted to reintroduce myself. My name is Cruz Mendez. I am the marketing director here at First Nonprofit, and in this section, we are going to be covering the financing options that are available to community action agencies in the United States. I'm going to kick off this section by sharing a poll for you to answer about how you currently handle your unemployment financing at your community action agency. Do you currently pay the state unemployment tax? Are you currently reimbursing, meaning self-insured, where you pay the state back dollar for dollar? Only when someone files for unemployment. It's also known as self-insurance. Other would be if you're participating in a PEO or some other program like First Nonprofits. Unsure if you don't know how you currently handle that financing option. It's just going to give everyone here a few more seconds to reply. Okay, it looks like 100%. So I'm going to end the poll. Oh, we're getting a few more. Just give a few more seconds. Okay. All right, I'm going to end this now and share our results. It looks like most of you are currently participating in paying the state unemployment tax to your local state unemployment agency. That is usually the most common financing option that nonprofits like community action agencies use. And I'm going to be going over the pros and cons of each of those two main financing options, whether it's tax paying or self-insurance, which is really the two main categories here. So to go over the pros of paying the state unemployment tax, that would be that you have a fixed annual cost, meaning that if you have a 1% unemployment tax rate, that is the fixed cost for your organization. That is what you're paying on a quarterly basis to your state unemployment agency. There is no risk for your community action agency above that assigned rate. That 1% is your cost for the year. On the con side of things of paying the state unemployment tax is that your unemployment tax is tied into the solvency level of your state agency's fund pool. So all of the tax payments that are being remitted to your local unemployment agency, they all get deposited into a pool, and those funds are used to pay the unemployment claims, not of just of your organization, but of everyone's participating in the unemployment pool. So costs can increase even if your experience improves. What does that mean? So let's say, for example, that your community action agency hasn't experienced any unemployment claims, for the last 3 years, but other people or other employers in your state may be seeing unemployment claims, or unemployment claims can be really impacting a specific employment sector, and that's causing a lot of withdrawals to happen from your state unemployment agency's pool. You could see a cost increase to your unemployment tax rate, even if your community action agency saw absolutely no claims from your unemployment account. There is a strain on cash flow, as the majority of taxes are paid in the first 2 quarters of each calendar year. So you want to make sure that you have enough funds set aside in the beginning 2 quarters of the calendar year to pay your unemployment tax. So in essence, paying the state unemployment tax is generally a higher cost for community action agencies, and there is a lower risk that is associated because you are capped again at that 1% or whatever your unemployment rate would be with your state unemployment agency. To give you an idea of how much the high cost is, here are 2 state unemployment tax rate notices that some of our members received before they enrolled into First Nonprofits programs. The one on the left is for New York, and the one on the right is for the state of California. But both of these rate notices highlight employer reserve balances. I'm going to try to zoom in here. So for example, in this New York one, it shows an employer account balance of $75,000. This balance isn't owned by the nonprofit. It is simply used to calculate the unemployment rate for the nonprofit. If you were to call the state of California and ask for some of this money back, they're not going to comply to that request, because again, it's all going into a pool and it's being used to pay the unemployment of all employees in your state. This one for California, for example, has $78,000 positive reserve balance. Same thing, not owned by the nonprofit. It is simply used to calculate the unemployment rate for the employer for the next year. So to go into the pros and cons of reimbursing. So if your organization isn't paying that quarterly unemployment tax, you only pay dollar for dollar, you're reimbursing or you're self-insured. So the pros of that is that it is generally a lower cost for a community action agency, and that is because you are insulated from the solvency standards, the solvency of your unemployment fund. So if other employees in your participating in your state are getting huge claims, but your community action agency isn't, you are insulated from that experience. The cons of reimbursing or self-insuring is that while there is a limit on individual claims, meaning if you can collect $300 a week, that is your cap as an employer. If an employee is collecting $300 a week, that is the maximum that they can collect. But you do have unlimited employer liability, meaning that if you were to close down a program or if you had to lay off numerous staff, you should have that money set aside as a reimbursing employer, because the state is going to be sending you a bill, whether in the next month or the next quarter, depending on your state. So you need to make sure that you have that money set aside, those funds set aside for any potential unemployment claims that come down the pike. This, of course, leads to an inability to accurately budget for your unemployment costs if you don't have that money set aside. And you can see a severe fluctuation of costs from year to year. Maybe you had to lay off some people one year, but maybe not the next. So again, just want to make sure that you have that money set aside should anyone collect unemployment. There is a loss of certain protest rights on base period claims as a reimbursing employer. Just want to point that out. That is, if you are looking into reimbursing, that is something that we can review for you and see if reimbursing is still a benefit to your organization, even with the loss of certain protest rights. And of course, it is really important that you audit all the unemployment claims as a reimbursing employer, because again, you're paying back dollar for dollar. So you want to make sure that no one's collecting for longer than they should be, no one's collecting more than they should be. So overall, reimbursing or self-insurance, there is a higher risk associated to your community action agency, but it's generally a lower cost. And just want to point out some things on the reimbursing side to keep in mind, kind of like I did with the rate notice for taxpayers, things to keep in mind as a reimburser. How much is an unemployment claim in your state? So this chart illustrates the average unemployment claim cost by state. This will be shared with you again after we wrap the session. But for example, in the state of Massachusetts, the average weekly claim right now is $731. On average, people are staying on unemployment for just under 19 weeks, leading to a $13,759 claim on average. And we are starting to see some of these claims go up as far as duration. And we're also going to be talking about this in further slides. We are also starting to see increases in just benefits across the board in many states. Another
layoff claims tend to linger longer than people who collect unemployment for other reasons. So as you start seeing unemployment rates tick up, these claims duration periods will last longer than other reasons people are collecting unemployment. If they have to leave their job because their spouse had to move, that claim would probably be a lesser period of time than just a layoff claim. So we're starting to see claims tick up for duration of weeks go longer than normal at this point.
Yeah, very good point, Cheryl. Another thing you want to acknowledge and review is your state's unemployment overpayment rate. So state unemployment agencies are going to make mistakes when it comes to paying unemployment claims. Again, someone could stay on for longer than they should be or be collecting more. In some of these states, you do see double digits on here. Like for example, again, in Massachusetts, a 20% overpayment rate. In New York, it's 32%. So that's basically like saying 32 cents on every dollar is generally being overpaid in that state. So again, just want to point out the importance of auditing as a reimburser or a self-insured employer. You want to make sure that every time you receive that benefit charge notice, you are auditing it and making sure that the liability is correct, the duration is correct, that there isn't any fraud happening. You don't want to just be, sending out a check. And with that, I'm going to pass it on to Cheryl, where she will talk about how First Nonprofit helps organizations like community action agencies that are tax paying and possibly looking at the reimbursing or self-insured option, or if your community action agency is already taking advantage of that lower cost that comes with reimbursing and self-insurance, and how First Nonprofit can help reduce some of the risk associated with that.
Thanks, Cruz. So we have 3 different programs that we offer. So we are able to help community action partner agencies at any level. So we know that no one size fits all programs. So that's the beauty of what we have. We have 3 full service programs that we can help, and we help determine which one best fits your organization. So depending upon what you want, we can help you. So we have a member-owned interest-bearing reserve account. So think of it, if you have like a health savings account within your organization, you set up an interest-bearing reserve account where you make deposits into your account with us, and we make withdrawals from that account only when you have to pay an unemployment claim. So it's there. You get a stop loss insurance policy on top, so that once you hit your stop loss deductible, we'll pay the next 2 times till you hit your cap of claims, so that you don't have to pay the claims on that. We have a fixed, if you are risk averse, we have full dollar coverage. So we have a risk transfer account. We can do that. Or if you even want to stay in the state plan, we have a plan where you can stay in the unemployment tax account. So we will do that. So you have, you stay in the state unemployment claim. We'll still offer you claims administration. And then we have an HR platform, which I'm going to talk about a little bit more. So all of our programs come with the unemployment claims administration, the HR platform, and then everything is there to reduce your risk when it comes to paying unemployment claims. And then if your state has mandated surety bonds, we'll provide the surety bonds. So some of you are in states that have to have surety bonds. We'll do that. And every plan comes with a fixed annual unemployment cost for up to 2 years. So there's really not a risk for you to come out. You know what you're going to pay for 2 years so that you have that budget certainty coming into this for 2 years. So we take a look at each organization individually so that you know. So we're going to do the analysis. We're going to offer so that it's an apples to apples comparison versus the state versus first nonprofit. We're going to meet one-on-one with you so that we know what your goals are and what your needs are. So it's not going to be a cookie cutter situation where we come in and say we only have one thing for you to do. If we can't help you, we're going to let you know. Our goal is to make sure that the program that we have either is going to help you reduce costs or we're going to protect you against future issues. So the rate projections for the upcoming tax year are going to be there. And then Cruz is going to drop something into the chat where you can request a savings evaluation for us. All states, most of you said that you're still in your state tax plan. All states have a mandatory deadline where you can opt out of the state's unemployment tax program, and that's a January 1 effective date, but your enrollment deadline to withdraw from the state is November 30th. So October 1st is tomorrow. So, you have a limited amount of time to make this decision and then make that change for January 1st, 2026. If you don't make the withdrawal by November 30th of this year for January 1, 2026, you're frozen again until January 2027. So there's just some examples there of the savings that we've done for some of the CAP organizations that we work with. 31% for an organization that had 289 employees, and then another 29% for a community action agency that had 59 employees. So these are long-term savings. For the organizations that come into the program, the retention rate is about 98%. So this is a decision that really works long-term. It's not something like your health insurance that you end up shopping around every year to see where you can get a better deal. This is really something that works long-term. The 2,300 agencies that have been with us, some of them started with us 30 years ago and they're still with us. And with that, I'm going to turn it back over to Cruz, who wants to talk about pending legislation. There's legislation that you've all been looking at for everything else, but there's a lot of pending legislation that's affecting unemployment and the cost that it's going to impact all of you.
Thanks, Cheryl. So yeah, this slide highlights some of the recent legislation or upcoming legislation that's going to impact employers, including community action agencies. We did highlight specific states, but if there is any state-specific information that we may have missed, or you want to learn more about what's going on in your state, please contact us. We'll share our contact information towards the end here. But do want to point out that states do regularly increase unemployment taxable wages. And that is important because that is what your assigned unemployment rate is being charged against. So for example, if your wage base in your state is $30,000, your community action agency is paying unemployment taxes on that first $30,000. So when we see increases, it's important to highlight them because you're going to be adjusting your payments the next year. So far, Colorado, Delaware, Illinois, Iowa, New Jersey, New Mexico, New York, Washington, and Wyoming have all announced increases to that taxable wage base. Several of these states, it's because it's tied to the average wage that is earned. But just want to point out that you will see some increases in those states. States also regularly adjust their unemployment rate schedules. We are going to start seeing some more announcements, but recently the state of Massachusetts does a great job of announcing rate schedules well in advance, and they've already announced that they are going to be increasing the schedule. They're going from Schedule D to a Schedule E, meaning higher unemployment taxes. The range is listed for you, and this isn't even including the COVID recovery assessment that they have been charging since the start of COVID. So we're going to start again seeing other states announce adjustments to their rate schedules, or perhaps even staying the same. States do also regularly increase weekly benefit amounts. So, we highlighted what the average weekly benefit amount is in your state. We're going to start seeing increases, especially in Ohio and Washington, because they have announced increases to the weekly benefit amount, and really want to highlight New York in this section as well, because the maximum weekly benefit amount is going to nearly double for maximum claims starting tomorrow, starting in October. I believe the current weekly benefit amount is about $550. It's going to be $950. So for those higher earners in New York, you're going to start seeing that maximum weekly benefit amount, again, nearly double in that state. States also regularly change the number of weeks of unemployment available to claimants. Most states provide 26 weeks. Massachusetts and Montana provide a few additional weeks, but there are some employers in states out there that only have access to like 12 or 13 weeks. Some of the ones here are highlighted, providing less than 26 weeks.
So I think what Cruz is trying to highlight really here is, even if your organization has no unemployment claims, each one of these bullets is telling you that you're going to get a rate increase regardless. When the wage base goes up from 30,000 to 32,000, that means an automatic increase to what you're paying in unemployment taxes. When the benefits go up, that means an automatic increase to what you're paying into the state. When somebody collects from 26 weeks to 30 weeks, that means you're getting an increase. So all of this means you as the employer are going to pay more in unemployment taxes in the state unemployment system as those increases are announced. If you start working with First Nonprofit, all of that gets reduced because you're not in the state unemployment tax system anymore. So that's one way to reduce your costs.
And another way that we help with that reduction of costs is through our unemployment claim service that is provided as being a member of First Nonprofit. So before an unemployment claim is even filed, you would reach out to your partnered unemployment claims administrator. If you need an estimate of what that potential claim is going to cost your organization, whether it's due to a layoff or a furlough, they can give you some of those estimates that you need, and they're going to be keeping you up to date with any of these changes, whether it's weekly benefit amounts or durations happening in your state via alerts. So when an unemployment claim is filed, your claims partner will process all that separation data and unemployment claims information to your state unemployment agency with the assistance of your HR staff or your managers, whoever it is that you designate to work with your partner here. And they are also going to be reviewing and preparing arguments and protest decisions, as well as attend hearings and prep your witnesses so that you win any unemployment claim that you do want to protest. If it is, a legitimate layoff or a claim that you don't want to protest, you would just let them know, that it is a legitimate claim and you don't want to take any further action. That's fine. But if it is in an event where you do want to protest the claim, they would assist you with that process. And when someone does file and collect unemployment, they are going to be auditing those benefit awards on your behalf, again, for duration and liability accuracy. If there is a credit that is refunded back to your account. They're going to make sure that it shows up on the next statement. They will also be able to detect fraud for any claims that shouldn't be on your account. And on the technical side, they are very helpful in reviewing personnel policies and procedures so that, again, you are able to win any potential unemployment claims. They would provide educational workshops to your supervisors and HR staff, again, so you win those claims. And on a regular basis, they would provide customized claims reports as well as claim status reports so you know, okay, who is currently on unemployment and how much is this person eligible to collect. All right, and that leads us to our remote employee compliance section of the agenda. We all saw a boom in non-compliance issues post-COVID having to do with remote employee compliance and unemployment accounts. So we like to use this example here of the state of Kentucky. It's bordered by 7 other states. So it's very possible, and we saw this in other areas of the country where someone is remote working for a nonprofit, and in many situations they cross state lines and move into another state and might not necessarily notify the employer, and those non-compliance issues could lead to a loss of employee eligibility for unemployment as well as penalties for employers if an unemployment account isn't registered. So as a first nonprofit member, that is one of the services that is available to you is, in the event that someone does cross state lines or you want to hire and bring on someone from a different state, we would partner with you to ensure that you are registered with that unemployment agency. We'll take care of all that paperwork. The liability thresholds can vary from state to state for each employer. Most states require a minimum of 4 employees before even being able to open an unemployment account and registering for one. There are some exemptions here, like for example, in the state of Pennsylvania, you can register for an unemployment account with just 1 employee. So really just want to point out, the importance of remote employee compliance. If you do currently have someone working in another state for you, or you're planning to hire someone in another state, it's important to know what that state's liability threshold is and ensure that you have an unemployment account, because should that person become unemployed, they could lose their eligibility. And again, you could see a penalty for not having an unemployment account already registered with the state. All right, and with that, I will hand it back to Cheryl so she talks about the different ways that we streamline HR and unemployment processes.
Thanks, Cruz. One of the benefits that we offer under all of the programs that we provide is our HR platform, which is the Mineral HR platform. It's a program that includes access to live SPHR and PHR certified advisors. You have access to them 12 hours a day or even longer than that, 8 a.m. to 7 p.m., where you can come in and ask them any sort of questions that you want to ask, or you can ask that online and they guarantee to get back to you within 24 hours, 24 business hours. And so it's a really valuable tool to come in and be able to ask them questions. You have access to hundreds of employee training courses. So it's courses that you can either assign out to your staff so that they have to take those courses and you get responses back, or they can go in and self-take courses. So if they want to go in and do some training courses on their own, or let's say you just promoted somebody to a supervisory role and you want them to take some classes to, beef up their skills, you can assign them classes. There are webinars approved for SHRM and HRCA recertification and credits, so they're there and available. All of this is no cost, so you don't have to go in and pay for these courses. There are a few premium courses that you might have to pay for, but the majority of this is at no cost to you. So they're handbooks, so they're federal and state level compliant handbook builders. So let's say you're just hiring somebody in the state of Louisiana for the first time and you need a Louisiana handbook. You can go in and build a handbook for somebody in Louisiana. Or if you want to start a whole new handbook for, your organization, you can do that. And then what will happen is if there are some changes to, let's say, Rhode Island just increases the state wages, if something happens, it will tell you that you need to go in and update your handbook to be compliant in the handbook. So it always makes sure that you're up to date and does that. So you'll get regular policy alerts for what's happening at the federal level and the state level so that you're always kept up to date. So there's breaking news, there's legislative updates. I'm sure that there's a slew of them coming out right now about what's happening with the government shutdown. So you'll be kept up to date about that. And then there's an extensive resource library and things to do. There's recruiting tools, there's a salary comparison, and then job description builder. So all of that's available to you 24 hours a day, 7 days a week, and it's there for you to use. So here's just a dashboard. So this is set up, since we're an Illinois employer, this is our dashboard. So it tells you right there. It gives you updates on what's happening, leave part-time. So beginning January 1, then it gives you an idea of what's happening January 2026, what's going to happen there, and then protection for state law. And then you can see over there with HR related news, federal compliance, and then SHRM certified training. So there's lots of webinars. And if anybody wants a demo of this, you just can let Cruz or I know, and we can do a demo of the program and send you, if you want to see a course list, we can send you a course list so that you can see that. So we're happy to show you the Mineral platform at any point in time. And with that, we'll wrap this up. Again, the request for quote is in there. It takes us 8 to 10 business days to turn that around. Remember, the deadline is November 30th. And then all CAP members, because you're part of this program, you get a discount on enrollment. So we're happy to be that. And remember, Denise sits on our board, so she's got a lot of insight into what's going on. And we already have 50 CAP agencies enrolled. So if you want any references, we'll be happy to give you references from folks that are already in the program with that. So to wrap this up, we hope that we've given you some knowledge today. We said that we would shorten this up so that you can start planning and do the analysis and then just move to execution. It's important, I think, to just do some spot checking. I know that everybody's really looking at their budgets and looking at ways to, tighten the budgets. And I think this is one way to look at this. Plus get all of the tools that we provide, the claims administration and the HR platform and everything else. So we're hoping that you'll take some time to look at this a little bit further. And with that, I'll return it back to Rebecca for some final thoughts. Or we can open it up if anybody has any questions.
Yes, thank you, Cheryl. Thank you, Cruz. Very informative. We will monitor the chat box for a moment. If you do have any questions, please feel free. Okay, seeing none. However, if questions do come up afterwards, please feel free to reach out to either Cruz or Cheryl directly. You have their contact information on the screen there. You can also send me an email with any questions, and I will make sure to get that over to the First Nonprofit team.
Thanks.
Yeah, you're welcome. And Cruz,
You can
if
stop sharing.
Oh, yeah. There we go.
great, thank you. Again, Thank you so much to Cheryl and Cruz for that very informative webinar and sharing all of those informational statistics about strategies for unemployment and HR. We would also just like to highlight some upcoming NCAP events. Our Management and Leadership Training Conference is going to be January 27th through the 30th, 2026 in Orlando, Florida. And next year's annual convention is going to be August 30th, I am guessing, to September 4th in St. Louis, Missouri. If you have any questions about the MLTC conference or the upcoming annual convention, you can visit that website there at the bottom. Also, if you have any questions for the NCAP membership team, please feel free to send any of us an email. That's Jovita, myself, Alex, and or Brooke. And also, please feel free to follow us on all of our socials. Again, thank you so much to the First Nonprofit team, and we hope to have all of you, our attendees, on a future NCAP webinar. Have a great afternoon.
Thanks, everyone.
Thank you.